Mastley and Christina Fiorenza. I am the Chief Human Resources Officer here at Thread, and Christina is a dedicated HR advisor here, serving multiple clients ranging from small to mid-size, all different industries. And we are here to help you answer the question, wage and hour what? So a few notes right in the beginning. Everyone is on mute because we are recording this session. We're going to post it on our website within about 24 hours. It will be available for review and sharing if anybody missed it. And you can feel free to hit the chat box down on the right side to ask any questions you've got. We'll be moderating that during our presentation today. The slides and the codes for credit will be sent in a follow-up email. So you will get the slides and the codes for SHRM and HRCI credits in the follow-up email following the presentation. We've got about 45 minutes of content maybe, and then we will answer questions at the end, and we may hit some along the way as well. We have a special shout out today to a special guest who joined in. Happy Father's Day to David Fiorenza. Christina's dad has joined in, so we welcome you, and feel free to ask some hard questions for Christina during our presentation today, and we will go ahead and get started. So why did we pick wage and hour? Why do we think this matters in the middle of everything that's going on? First question that came up, will this be recorded? Yes, this is being recorded and will be available on our website within about a day. These slides will all be sent to every attendee in a follow-up email along with the codes. So why did we pick this? Well, number one expectation that new employees have is that they get paid for the work they do. You do not get any points for doing that correctly, because it's an automatic expectation. But if you do it incorrectly, or it's late, or the dollars are wrong, or anything else, people notice, and that is a huge negative for you. So let's make sure we get this right. In addition to taking care of your employees, you've got liability issues and everything else to deal with, and we're going to talk about some of that today. So you've met Christina and I right there. That's who we are. Credit codes will go out again, like I said. What's going on in America? What's going on in our world right now? There's a lot going on. One of the things I want to make sure everybody writes down, if you're paying attention and taking notes, is the website worker.gov, worker.gov. And I want you to visit that website as soon as this presentation ends today to get an idea of what that website has. It has a lot of stuff for employees that says, have you been paid correctly? Is your employer tracking your time? Are they doing meals and breaks properly? And And the website gives people ammo to basically file claims against their employer. So you definitely need to know what's on that website, worker.gov. And if there's anything that you don't understand on that website, give us a call. We're glad to help. That's what we do. So what's going on right now? With the COVID leaves and all of those situations that popped up in the last year or so, the required paid leave and all those things expired at the end of December, but several companies have chosen to continue those. You don't have to do that on the federal level. There are some states who are requiring pay for vaccines. So in New York, for example, you're required to pay up to 4 hours per shot. And you need to look at the state laws. That's something we're going to repeat multiple times as we go through this today, is there's the federal law, and then there are all of the state laws. And the federal laws haven't changed a whole lot over the years until recently, but the state laws is where all the action is, and that's what you need to keep up with and stay on top of. So you need to know what the states say is paid leave required for vaccine time or anything else. Another thing that's going on is a lot of companies are switching into a hybrid workforce or a remote workforce, some combination of those two. There is a huge wave of resignations going on in America. I saw a stat yesterday that said up to 40% of employees are considering resigning their jobs and switching careers, going to fully remote jobs, things like that. I've already heard from a ton of HR people that this is happening. They're having a hard time finding talent, filling open roles, and finding people, and they're getting a lot of resignations for people who don't want to come back to the office. That's a big deal. With remote work becomes a lot of new issues. Like if you have people who said, hey, if I'm going to work from home and I'm remote all the time, a friend of mine just moved to Alaska because he said, if I can work anywhere, I've always wanted to see Alaska. He moved there. He's there now. So now that company who never had an employee in Alaska is going to have to set up a new withholding account for unemployment, tax, all that kind of stuff, right, for different states. So that's something to pay attention to. When live and work locations change, if it's a temporary thing, it's not a big deal. But if people are really changing where they work, then you've got to look at, do you need to open new withholding accounts and state accounts? Also, another thing that's new in this remote and hybrid work environment is expense reimbursement laws. California and Illinois specifically have rules about expense reimbursement. Illinois' rules are extremely vague, which makes it hard on employers, but you've got to study those to find out what you need to pay for and what you don't have to pay for, so you don't get yourself in trouble there. Another big thing that's happening right now is enforcement is increasing greatly. The Department of Labor has increased their budget, is hiring, has put out this website, worker.gov, which is basically a duplication of websites that exist in California that are there to help plaintiffs' attorneys file claims against their employers. So you should definitely be aware of what that website says. Also, with wage and hour claims, if you have EP&I insurance, which is Employment Practices Liability Insurance, wage and hour claims are usually not covered by that insurance. So if you do have that, find out if it's covered. If it's not covered, then make sure you're doing everything we're talking about today to avoid wage and hour claims. Because the challenge with the wage and hour claim is that if you have $1 owed to an employee because you incorrectly paid someone or didn't track time or did something wrong, then you also are responsible for paying all attorney's fees. Christina and I, and I'm sure y'all, if you're HR folks on here, Nina and everybody else I see, I know y'all are getting a lot of emails every day about settlements that are happening at small companies, big companies. It's all over the place. There's a ton of liability and a ton of costs related to wage and hour claims. So for example, if you mispaid someone, you didn't pay their overtime and you owe them $300. I had a claim with a client one time where the entire amount owed was about $600. The attorney fees were over $60,000, and all of those had to be paid because the employer had made a mistake on what they owed. It's much easier just to pay what you owe and do it right the first time than to go through all the trouble of all that kind of stuff. When you get a Department of Labor claim from an employee, they're going to go back 2 to 3 years, typically 2 years. And they're going to say, if you have one person in this job, I want to talk to every person who's ever been in that job in the last 2 years and look at their pay records. And I want you to prove to me that you did it right or wrong. If you knew you should have done it better and you didn't, they will double that money that's owed because they'll call it intentional. And then they get attorney fees, and then they add penalties to that. And then they can threaten you with jail time as well, believe it or not. So I haven't never seen anyone who went to jail for this, but I'm sure it has happened. But the money is not good. The PR is bad. Right now, when it is so difficult to attract new talent and to retain great talent in your company, what you don't want is one of these headlines with your company's name on it, generating bad PR, especially about not paying your employees correctly. Mm-hmm. No great employee is going to say, I want to go there, where they choose not to pay their people properly. So make sure you don't end up on one of these headlines here.
So let's jump into the meat of this. And a lot of what Scott has been saying is employees, employees, employees. One of the biggest, one of the most often questions that I'm getting from clients is, what's the difference between an independent contractor and an employee? And if I have a project that'll take about a year, let's say, can I just make that person an independent contractor so that I don't have to pay them benefits, don't have to give them paid time off? Well, there's not a black and white answer really to that. There's a couple of different things that you need to consider. An independent contractor usually works on a specific project, so check one for that one. They usually have other clients. They usually have a handful of clients and don't get all of their income just from one company. They also use their own tools and supplies, computers, what have you. They submit an invoice for payment, and they cover all their own taxes and their workers' comp. An employee, on the other side, is somebody that you tell how many hours they're going to work in a work week. You tell them when to come in and when to leave. Generally, sometimes you have a salaried employee that works different hours, but you have a guideline for what you expect out of them. And that's the big difference, is your expectations also. You tell them how to complete their job and in what manner. You provide them the tools and supplies. You do offer benefits and pay time off, so they have to follow company policy. The company also pays a portion of the taxes, and the employee doesn't submit an invoice. There's generally a timekeeping system, or if the employee is salaried, they just get paid on a regular basis. And that's one of the differences too with an independent contractor, is they don't usually get paid on the same pay cycle as employees. So those are the big main differences. Again, not black and white, and some of these can be iffy. So talking to your HR specialist, if you have one, or your consultant, is probably the best way to go when you're trying to figure that out. So when you're looking at this and you have a project, let's say if everybody can think about maybe a project that's coming up, I want you to think about who controls the work being done. If you're controlling it, then you have an employee. If you're simply handing over the project to someone else and saying, can you please have this done in 3 months? That's probably going to be an independent contractor. Also, how the work is done. Again, if you tell the person, the worker, how you want the job done, that's going to be an employee. If you allow them to do it however they choose, as long as they get the end result, then that'll be an independent contractor. And then if the last piece with that is, if the independent contractor is working on a piece of the company that's essential to the company, then we need to look at the difference between an independent contractor and employee for that person. Generally, an independent contractor will work on something that the company does not specialize in and therefore needs to bring in outside help. And like Scott was saying, the penalties for this are huge. They can include backdated payments with interest. They can include other fines. And then like Scott said, they can also include jail time if the misclassification was considered willful. So that's your main big difference there, is independent contractor versus employee. That's the first thing that I wanted to talk about. The second thing is, let's say you've decided that this person is an employee. Now you have to figure out if their position is exempt or non-exempt. And when I say these two words, what I mean is exempt from FLSA, which is Fair Labor Standards Act, saying that that employee is exempt from overtime. So generally your higher level professional salaried employees are exempt from overtime. They can work more than 40 hours a week. They can work on the weekends. They can be on call. They get their same salary every 2 weeks or biweekly or monthly, however your company pays. A non-exempt employee does qualify for overtime, and we'll get into some of those specifics a little bit later in the presentation. Right now, I'm going to ask Scott to tell us about some of the tests that you can do to see if your employee should be classified as exempt or non-exempt.
Right. So 3 things to talk about when you're looking at someone to determine if they're exempt or non-exempt. And I see there are a couple questions coming into the chat, which is great. I'll look at those in just a second. The 3 things are to be exempt, which means you are exempt from the minimum wage and overtime requirements and things like that. Means that you need to meet all 3 of the things listed on this slide here. The salary basis test. That means they have to be paid a fixed salary for every week that is not affected by time worked. So it doesn't matter if you work 12 hours or 70 hours, the salary is the same every week. That's what the salary basis means. If they're not on that salary basis, then they're not going to be exempt, right? The salary level is set at $35,568 per year or $684 per week. So if they are making less than that, then they are not exempt, no matter what. Even if you're giving them a fixed salary and everything else, if they're below that number, they're not exempt, which means you should be tracking time and paying overtime for them. So number 1, fixed salary, same every week, has nothing to do with time worked. It's just paid for the result, right? If someone's working a salaried job and they're truly exempt, then they work part of the day, they get paid the full day. They work part of the week, they get paid the full week. That's just the way it goes. If you have a salaried exempt person who's not working very much, then you still pay them, but then you talk to them about what's expected in terms of work performance. And if they consistently don't put in the time and effort, then you can let them go. But you got to make sure you pay them properly, okay? So basis is the fixed salary, salary level is a dollar amount, and then there are duties tests. And the duties tests depend on the type of exemption that you have. So these are types of exempt positions. To qualify for the executive exemption, you need to be in a management role where you're managing the equivalent of 2 or more full-time employees. So that could be 2 or more full-time employees, or it could be 4 or more part-time employees. Either one is okay, but you are responsible for hiring, firing, or making recommendations, hiring and firing, and managing the performance of those employees. That's the executive exemption. Administrative exemption may be someone, let's say you're the HR manager or the marketing manager for a smaller business and you don't have direct employees, but you're doing a office or non-manual job that is over a business department. You're responsible for something that's an important, essential part of the business, like marketing or sales or HR or, fill in the blank. So that's administrative. Where that gets into trouble is sometimes if you have a maintenance supervisor who sometimes in the property management industry, the maintenance supervisor is not managing the people directly. It's actually the branch manager or the on-site manager, right? Or if you have an assistant manager who might not be managing employees directly, but has a management title, then those positions you got to be very careful about. There's been a lot of lawsuits about assistant managers, maintenance supervisors, people like that who might jump in and do the same work that their employees are doing. So if you're helping to load shelves or fix AC units or doing things like that, that is manual work, and that knocks you out of this admin exemption. Okay, so be careful about that. Professional exemption is going to be like doctors and teachers and lawyers. It's advanced knowledge, advanced degrees. Those are professional exemptions. You don't have to manage people for that. Outside sales is very specific, has to do with folks who are focused outside of the company's office. They are doing sales at their customer's place of business. I've seen a lot of articles recently where this position is being looked at because if people are working 100% remote and their position is outside sales, but they're sitting in their home office all day, every day, that may be reevaluated. So inside sales is another position that is low-hanging fruit for plaintiffs' attorneys. They go after that all day long because if you're calling inside salespeople exempt and they're inside the office all day, they don't qualify for that outside sales exemption unless they're making over 50% of their pay on commissions. Then you can look at that. But pay close attention to assistant managers, inside sales, maintenance supervisors, positions like that are easy targets for plaintiffs' attorneys. Computer professionals is a little different. This is not your PC guy who runs around the office going, why can't I print or why can't I do whatever? That person is typically going to be an hourly non-exempt position. The computer professional exemption is unique because it can be paid on an hourly rate. You can either pay that person, only this position, a salary of at least $6.84 per week or the hourly rate of $27.63 per hour. Has to be at least $27.63 per hour or the $684 per week. And those positions are going to be systems analysts, computer engineers, software engineers, programmers, people who are working on design, not fixing PCs and giving new hires access to email, stuff like that. So 2 different things there. Okay, I'm going to take just a second, Christina, to look at some of the questions that have come up in the chat.
Mm-hmm.
Why would an employee file unemployment under the company they're performing services? So employees will file unemployment if they've been let go, and sometimes even if they've quit their job, so that they can collect on the benefit that the company has paid into while they were employed. Now, every state is different, but typically if you have documented performance issues before you've let someone go, you have a chance of maybe winning that employment claim. The system is set up to try to find ways to pay employees. So you've got to do everything right if you want to win that claim. If you have not documented performance coaching and all that and given people a chance to improve and explain the consequences for not performing, then the chances are they will get unemployment. Most states have a dollar amount that they had to earn to be eligible under your company's account. So you can look at that as well. Another question, an employer.
It looks like that person went back and corrected herself and said that she meant an independent contractor. So why would an independent contractor file unemployment?
I see that. Good point. Yeah. So in the past, pre-COVID, independent contractors could not file for unemployment. They were not eligible to file for unemployment. With COVID, the states and the federal government extended unemployment benefits to independent contractors to help them get through this time, because a lot of small businesses just disappeared, went out of business, and stopped hiring stopped anything that wasn't essential, like contractors. So a lot of contractors were out of work during this time, and they extended unemployment benefits to them because of that. But normally that's not the case. And we'll just have to see if they continue that trend or they end up going back to the way it was before. But for right now, that's to be determined. Another question is, can an employer dictate which state a remote worker resides, so to manage state tax issues and rules? I think you can do that as an employer. You may lose employees, who want to move anyway. But you could say, we only hire employees in certain states. You're definitely okay to do that. Just like right now, companies will say, I have an office in Florida, so I'm looking for someone in Florida, and you don't live there. It's okay to do that. Other question, are fundraisers considered outside sales? So if you're a fundraiser and you're a W-2 employee and you are out visiting people, raising money, something like that, I think that falls into a gray area. And we'd probably have to look at that specifically to see what else they're doing and what percentage of their time is spent doing that. But I think that could fall into that if that's what they did all the time. Okay, moving on. Questions. Do we have to pay extra to an exempt employee who works on the weekend? Y'all chat in your answers, yes or no. I see no, I see no, no. That's correct. You do not have to pay extra because that's a salaried exempt employee, and they do not get paid on time worked. All right, what about the first and last week of employment? So what if you hire a salaried exempt employee and that employee starts on a Wednesday and your normal pay week is Monday through Sunday? Do you have to pay them their full salary for that first week? Yes or no? Okay, I got a few no's and then a yes or two. So the answer is no. You do not have to pay them their full salary for the first week and the last week if they work a partial week in most states. There may be states who say, you know what, no matter what, you've got to pay their full salary for any time worked, just like you need to know what the final pay rules are in the state you're in, because the final pay rule may say, even if your policy says you don't pay out PTO at the end of employment, we consider accrued PTO as wages earned, and you have to pay that out. Some states will say it's up to your policy, but you need to know what those state rules are. All right, last question here. If an exempt level employee is out of PTO, so they have no more paid time off, vacation, or anything like that, can you deduct 4 hours from his or her pay if they take a half a day off? Again, I see, okay, some yeses and some no's, right? So what you want to do is, if they're out of PTO and they take time off, you still have to pay them for that time if they work a partial day. The only time you can deduct a less than a full day from an exempt level employee is if they're on intermittent FMLA leave. That's the only time you can do that. So any other situation, you can only deduct full day increments of pay. There are 6 or 7 situations where you are allowed legally to deduct from a salaried exempt employee. And instead of listing those out and getting you into trouble, what we always say is, before you ever deduct from an exempt salaried employee's pay, call us, call your HR consultant. If we're not your HR consultant, we should be. Call us today and we can set that up. Call your attorney. But be very careful deducting from salaried exempt employees' pay. Now, what you can do is, I could say to Christina, who's a salaried exempt employee, you know what, why don't you go ahead and take a day off on Friday, and I'm not going to deduct those 8 hours from your PTO time. So I have the right as a manager to do that as a reward. PTO is discretionary, but what you don't want to do is deduct from someone's actual salary or pay to avoid liability for that.
Okay, thank you. So now that we've learned all about what an exempt level position is, let's talk about non-exempt. And I just want to reiterate that we're talking about the position and the job duties, not the person. So for non-exempt, 3 things that you need to be sure that you're following correctly. The first one is minimum wage. Minimum wage is different from the federal level to the state level, and some states even have county level minimum wage. So it's very important to make sure that you're following your state's recommendation requirements really for minimum wage. Something to remember here too is if you have employees that you're paying a tip credit to, so you're legally allowed to pay them less per hour because they're going to be getting gratuities and tips. At the end of each pay period, it's up to you, it's up to the company to make sure that their hourly rate, that's below minimum wage, plus their gratuities, at least equals minimum wage. So you have to do that every pay period. And I have had clients where an employee hasn't worked enough hours, therefore the gratuities weren't there. And so at the end of the pay period, they were below minimum wage. If that happens, it's up to you as the company to bring that person up at least to minimum wage. And this is a big one, and I really recommend making sure that you're doing this check if you have employees that are on minimum wage, below minimum wage. With that, if you have employees that are on minimum wage and they've got garnishments and other deductions that come out of their paycheck, there again, you have to make sure that those deductions and garnishments don't bring the employee below minimum wage. So just a couple checks that a lot of your payroll systems, I'm sure, already handle. And if you don't know if yours does or don't know how to do that, feel free to reach out to us or your HR consultant. Another big thing that you need to make sure is that you have a lot of record keeping when it comes to non-exempt employees. And these do vary by state. There are some states that say you need to keep track of the exact hour and minute that these employees log in and log out. There are some states that just say hours per day. And then there's others that say per week. But the basics are you have to keep all their personal information, which I'm sure you do in your system already. You have to make sure that you keep track of hours worked per day per non-exempt employee, hours per week per non-exempt employee, and then you have to be able to show their hourly rate, and then how many hours they worked of straight time and how much time they worked overtime. These are the basics. There's a few other things that you have to keep track of, but you've got to be able to show this if a claim is filed against you, and you have to keep this for at least 3 years, longer if you're in the middle of a suit, obviously. So lots of record keeping that goes into that, and this is very, very important because I've seen many companies that say, well, they work 8 to 5, so of course they work 40 hours a week. Employee claims I worked 50 hours 3 weeks in a row. If you don't have these records, the employee's probably going to win because you can't prove otherwise. And then finally, for non-exempt, and this is another big one, is the overtime pay. So overtime is any hours worked over 40 in a given work week. 2 things there. So I said any time worked. So that means that if an employee takes PTO, paid time off, vacation, sick time, or gets paid for a holiday, and in that week they end up working 45 hours, but 8 hours of it was paid time off, you do not have to pay 5 hours of overtime. And that goes back again to the record keeping and making sure that you have all of these records solid. The other piece with overtime pay is that there are a lot of states that require overtime pay for any hours worked over 8 hours, California being one of them. There's also some states that say if an employee works 6 days in a row, that the 6th day needs to be paid at time and a half, some of them double pay. So it's very, very important for you to make sure that you're following the federal law and the state laws for your state. And here's the thing, you may be an employer that has employees in multiple states. You want to make sure you're following all of those states' regulations. And make sure that you've got that in your handbook so that each employee in the various states know what they can do and what they can't do. Also for overtime, and this is a hard one to track sometimes. If you have an employee who's non-exempt and regularly receives gratuities, commissions, or expected bonuses, those dollar amounts need to be figured out and go into an overtime rate. So if an employee gets paid $10 an hour, works 45 hours a week, and got $10 per hour, let's say, of commissions, then you need to figure that in. So they've got a new hourly rate when it comes to overtime. So it's called weighted overtime. So that in a lot of the systems, a lot of payroll systems will do that for you, some won't. So that's an important piece to look at if you have non-exempt employees receiving bonuses, commissions, or gratuities. So the big thing here to remember with non-exempt employees is that you have to make sure that you've got all the reporting in place, all the tracking is being done, and that you pay them correctly the rates that they need to be paid. So some questions here that we'll put out to the group. What if an employee works overtime, but he or she did not get the time pre-approved? Does the company have to pay that non-exempt employee overtime? Very good, very good. Yes, the answer is yes. So I can hear some of you that maybe said no saying, but they didn't get it pre-approved, so why do I have to pay that person when they didn't ask to get it pre-approved? It's clearly written in our handbook. Well, they're a non-exempt employee. They must be paid for all time worked. So how do you handle this? This is now a performance issue when you go talk to the employee about that. Hey, reminder that you have to get your overtime pre-approved. If it happens again, progressive discipline or whatever needs to take place. But that becomes a performance issue. You must pay non-exempt employees for all time worked. Can I give a non-exempt employee time off instead of paying for overtime worked? What do we think there? Okay, so it's a little bit of mixed answers there too. And the private sector, no, you cannot exchange it out. There are some in the public sector, there's a little bit of different rules, government and schools, but for the private sector, you cannot give them time off instead of paying for overtime. So considering that when you're looking at your budget and your employees and what they're making per hour is very important. And again, making sure that employees know that they need to get overtime pre-approved if they're the ones wanting to do it and they haven't been asked. The other thing to consider is—
Christina, can I jump in real quick?
Yeah.
Just clarify on that. It is okay to let people go home or say, I need you to clock out before you hit 40 hours. That's totally fine.
Yeah.
If you're managing hourly folks to say, clock out before you get overtime, that's just managing your budget. That's totally fine. And I saw that one of the answers says it has to be within the same week that overtime occurs. So if you're letting people go before they work overtime, then they're not working that time. That's okay. But what you cannot do is say, you already worked overtime this week, but next week I'm going to let you take half a day off and then we won't pay you overtime. That's what we're saying. Don't do.
Right. Very good. And then I know the last one we kind of just discussed, do I have to factor in commissions to a non-exempt employee's overtime rate? And yes, like we just discussed, yes, that needs to be factored in. So we've talked about a lot of things that you need to pay attention to, both at the exempt and non-exempt level and at the independent contractor versus employee level. So what I wanted to go over here is the most common mistakes that are made in this realm. The first one is misclassification. Again, employers, I have some clients too that say, can I just make this employee exempt so that I don't have to track the time? Well, technically you can do what you want, right? But from a compliance standpoint, no. You have to make sure that you're classifying each position based on their duties, the salary, all the things that we've reviewed there. Again, based on position. Another big thing is not tracking all time. One of the things there is think about with all this remote work and even before remote work, when an employee goes home and checks email after hours, even if they're not asked. If it's a non-exempt employee, they can come back and say, well, I worked 3 hours at home. And if it's not tracked, then you've got a little bit of an issue there. So making sure all time is tracked, both at the job and work site and at home or remote if that comes up. Not paying for all time worked, that's a really big one also. Miscalculation of overtime pay, that's happening a lot. Again, commissions, gratuities need to be in there, averaged in for their overtime pay. Another big one is deducting below minimum wage. And I think I did see a question over here about garnishments. Garnishment, let's see.
It says if I'm subject to a large garnishment, does my employer have to ensure that I receive minimum wage after the garnishment?
They do in the garnishment order. There are specific rules that the employer must abide by to ensure that employees don't go below a certain percentage of their rate and their minimum wage. So that's included in the garnishment order from the courts. Unless
it's an IRS garnishment or wage order, the IRS can take your entire check. So with almost everything else, there's a percentage that you have to calculate, like Christina said, to make sure you don't go below a certain amount. But if it's the IRS, they can literally just put you on the street, take your check. So they play by different rules.
Yes, they generally do. Another piece, another big mistake is allowing that off the clock work. So again, allowing a non-exempt employee to take their work home or check emails, respond to emails from home without paying them. So no off the clock work. Can they work when they get home? If that's part of your schedule and your expectations, sure, they just need to be paid for that. And then another big one, because everybody on this call right now is getting trained, but I dare say that most of your managers and supervisors are not on this call. And I would also venture to say that probably some of them haven't received any HR employment law training, if you will, right? Because we like to take those individual contributors that are so good at their job, and then because they're so good, we move them up to management. We say, here you go. And we forget to train them on all of these things. So that's something that Thread specializes in, right? Is training your managers and your supervisors and you to make sure that they're running the departments correctly, that exemption levels are correct, that employee versus independent contractor. So we watch all of that. We watch the federal laws and we watch the state laws constantly to make sure that our clients are in compliance. So that's a lot of what we're doing behind the scenes.
Okay, so what's getting companies in trouble right now? Well, there are so many ways to step in it accidentally as an employer, and we can't cover all of it in this time. Obviously, we got limited time, but we could talk about wage and hour stuff all day long. So we're going pretty quickly, and we're just hitting the highlights to make sure you stay out of trouble, right? Misclassification is the big one. I get a lot of companies who say, what if we just call them an independent contractor for the first 3 months, and then if they work out, then we'll hire them as employees. A lot of companies will do things like that and take a chance, but you know they're really not independent contractors. So they could come back and say you owe for employment taxes, you owe for liability and all kinds of other things, you owe for benefits, all that kind of stuff. And that has happened. So be very careful when you're doing that. Check with your HR folks to make sure your independent contractors are true independent contractors. Comp time is something you should eliminate from your vocabulary unless you work for the government. Again, the government makes the rules, but then says they don't apply to us. That's my Mastley opinion. So comp time only works with government employees. With the rest of us, it's a no-go. It will only get you in trouble. And when I say comp time, we're talking about when you say, instead of me paying you 5 hours of overtime, I'm going to let you work 5 hours less the next week, and it will keep your pay the same, that kind of thing. That's comp time, and that does not fly. Don't do it. Don't even talk about it. On-call and training time. So a lot of times companies will say, we hired a new employee, but we asked them to watch 2 hours of training videos before his first day. We don't have to pay for that, do we? Yes, you do. Because you've required some training, the employees completed it. They would not have done it otherwise. So you need to add those 2 hours of time to their first paycheck. Make sure that's tracked and recorded. It's always a good idea to have employees approve their time. I talked to a prospect recently who prints out like an old school time card and has the employees sign it, which if that's the system you're using, then it's okay for them to do that. Make sure they approve it. If you're in a payroll system like I saw, the we sell here at Thread, we can set it up so every time your employees enter and submit their time, they're acknowledging that they have entered all time, been paid for time worked, and that it's accurate and correct. Helps protect you in the future if somebody comes back and says, wait, I worked more than I said. On-call time, there are many states who require a minimum payment if people come into work. But on-call time is confusing because employees will think, I was on call on Saturday, that means I get overtime. Not necessarily. It's only overtime if you work over 40 hours in a week and you're in a non-exempt position. That's it. Doesn't matter if you're on call or not. But on-call time sometimes needs to be paid if someone's required to stay in a certain place and they can't go out and live their life while they're carrying around their cell phone. If they're required to be there, then that's all paid time. But if they can go out and do grocery shopping and mow the lawn and stuff like that while they're on call, then that's not paid time. They only have to get paid when they're answering a call and actually doing work. So you need to look at your policies and pay procedures relative to that.
Scott,
travel time.
Scott,
Yeah.
There's a really good question as it relates to that. What about providers who take CME courses for the license requirement? They're hourly employees. Do we have to pay for the CME time?
Okay, good question. If the company is requiring that they complete those credits to keep their certification, then you should consider paying for that time. If you're not requiring it and the employee is just choosing to get an HR certification and says, I just want this, and you're not requiring it, you don't care whether they have it or not, then that's a voluntary situation. So any training thing comes down to, are they doing it during work time? Is it required or voluntary? Does it benefit the company or not? Now, as an employer, I would like for people to be certified. And so I would, if I can afford to, pay for that training because that encourages employees to become certified. You're supporting their career advancement, professional knowledge, and all of that. But that's a different discussion. So it really comes down to, is it required? Is it voluntary? Is it during work time or outside of work time? If they're doing voluntary courses outside of work time on their own, you don't have to pay for that. Travel time is very complicated. It has to do with what you're doing while you're traveling. But for hourly employees, the easiest way to think about it is if they are traveling because you've asked them to for their job and they're doing it during their normal work hours, then that would be paid time. So if you have a dental hygienist who you say, I need you to go from my Norcross, Georgia location to my Kennesaw, Georgia location to help out the team during the day, then that travel time would be paid. If they are sitting in an airport on a work trip that you're asking them to take and their flight doesn't leave till 5 o'clock and their work day normally ends at 4, then you can stop paying them after 4 o'clock. So it's a little confusing. There are fact sheets on every one of these specific issues on the website, dol.gov, and you can look up wage and hour fact sheets, and the specifics are in there. Technology has created a new situation where people can constantly check email and voicemail. We all have our phones with us all the time. It's getting out of control. So be careful with that. You can even establish work time policies with remote employees or anybody else where you say after a certain time of day, if you're an hourly employee, do not check email, do not check voicemail, do not do any work, whatever, and you can do that. With salaried employees, we can work all the time and it doesn't matter. We're not paid on time worked. Breaks and meal periods come into play. There are a lot of states have rules about this, but typically under federal law, any break that's 15 minutes, sometimes under 20 minutes, depending on where you are, is considered paid time. You're not clocking in and out for that. A great way to get yourself in trouble as a company is to set up an automatic meal period deduction in payroll. Like everybody gets an hour automatically deducted. Well, then you have the employee who goes, I didn't get to take that hour. And you forget to go back in and add it on the paycheck. And all of a sudden, a year later, that's happened 100 times. That's a big problem. So we advise against any kind of automatic meal deduction in payroll. Just let people clock in and out as they should. And let's see here. If someone needs to keep up with their license, but they go out of town for a conference over the weekend, do they pay? Good question. So again, if it's voluntary and they're choosing to go out of town and travel and do all that kind of stuff, then you don't have to pay. If you're requiring them to attend a conference and take classes and get credits, then it would be whatever crosses over their normal work hours. So the weekend is where we'd have to kind of talk about exactly what they're doing, how much time are they spending in class versus having lunch or networking or things like that. If it were me, I would look at the time they're in class if you require them to do it and say, you know what, even though it's outside of work and all that, I might think about paying that to make sure I'm safe. Working off the clock is a big deal. Employees say, hey, I love this company. I love you, my manager, and it's no big deal if I do a little bit at the end of the day every day. Don't let them do that. That will come back to haunt you almost every time. It may not be the employee who's actually doing the work off the clock. It will be someone else who has no loyalty to you and will say, I'm aware that they're doing something that violates wage and hour laws. And like I said, for plaintiffs' attorneys, if you owe $1, you get all your attorney's fees covered, and they know that. And so they'll go after even the little claims, and then they'll just tie it up until you settle it for big money. So if you have a company softball tournament, do you have to pay people? Yes or no? This is my test just to see if y'all are still awake, paying attention here. All right. Somebody's paying attention. Somebody's still awake. Good. No, that's right. It's a voluntary recreational event. You don't have to do it. But if you said, hey, Christina hits a home run every time she gets up, so I'm requiring you as part of your job to be on my team and be at this tournament, then yes, I need to pay you. But if it's voluntary recreational thing, you don't. Remote, well, let me go back to remote work real quick. So remote work, there are things like monitoring software now that companies use. My brother-in-law is a software programmer, and he has software on his laptop that measures how often he's on the computer, how often he's responding to tickets and emails and all kinds of stuff. There's even monitoring software out there now that will actually take your photograph every 10 seconds or whatever to make sure you're sitting at your desk. That is a guaranteed way to lose employees, because it's like saying, I don't trust you at all. And I want to make sure you're sitting there and working. And that's going to be one of the reasons that people leave their jobs and go to places where companies don't do that. Now, I think it is okay to have monitoring software that just says, are you logged in? Are you available? Especially you're in a role where you're an account manager, you're a technology support role where you're having to respond. They need to know you're there. But the key is, that was a combination of goal and key. A key is you've got to have metrics in place where you can objectively manage performance as a supervisor. You have to raise the level of your game as a supervisor, manager, HR pro in this new world of remote work. Because if you're not able to objectively measure whether people are performing well or not, you're going to struggle. So you've got to put that in place. And again, we can help you with that. That's one of the things we do with our clients, is go job by job and talk about what measures success, what doesn't, and how do you put that in place. Because you're going to have a hard time if you're just going on feel when you don't see people or know what they're doing anymore. There's a lot of suspicion created because of that. So here's a comment to each presenter. Excellent dictation. It said, good participation by the person observing. Came across as knowledgeable, interested, and helpful. Good job. Thank you for that feedback, neutral, unbiased participant. We appreciate that. One of the biggest things you can do to comply with wage and hour laws is just do it right. Follow the rules. And in order to do that, you need to know what the rules are. So you can visit dol.gov to find out what the rules are. You can study the Fair Labor Standards Act, which is the law that governs wage and hour compliance. So the FLSA is the law, and the Department of Labor is the enforcement of the law. There are lots of resources out there. Sometimes you don't have time to spend 4 hours researching. That's why people work with us, so they can call Christina or me or someone else on our team and say, what do I need to know? What do I need to do? What matters? What's noise? How should I be spending my time? And we can get you into total compliance if that's where you want to be. We can train your management team. We can document your processes, update your policies, put everything in place for you. So we appreciate your attendance today. And if you are not currently working with us, give us a call and we will hope to be working with you soon. Here's our contact information. And again, all of the slides will go out tomorrow along with the codes for the HRCI and SHRM credits for anyone who needs those. But at any time, reach out to me or Christina at the emails or numbers on this slide, and we will be glad to talk to you. So have a great day.
Thank you.